is a big day here on the floor. As we mentioned, NYSE Euronext, Deutsche Boerse taking a big step together to become potentially the world's biggest exchange operator. Joining me now here on the floor is Duncan Niederauer, CEO of NYSE Euronext.
Nice to be here.
Congratulations on the vote today. You got overwhelming approval of New York Stock Exchange shareholders. July 13th, German shareholders get to vote. What's the initial read?
Big milestone today, but a bigger milestone next week, right? So until we cross both milestones, we're not really where we want to be. But I think a lot of pretty humbling to have such overwhelming support today from our shareholder base. The support from the DB shareholder base has been equally comprehensive and overwhelming. The challenge is we now need to get everyone to tender the shares. As of last night, we had 11% tendered so far. That doesn't sound like much when you're trying to get to 75%, but we would expect it to start to really pick up today. A lot of the shareholders said they were going to wait to tender and defer the decision until they saw how our vote went. Now that our vote's out there, they have it. If the numbers don't start picking up today, I'd be concerned, but so far so good. Still a big threshold to get over. 75% is a high hurdle.
Right, that vote's set for July the 13th.
Next Wednesday.
That's right. But we've seen this massive wave of consolidation in exchanges this year. You saw the NYSE TMX bid fall apart. You saw the Singapore-Australia deal not get done there. What makes you confident that this one will?
Well, I think we've already gotten further than a lot of those deals did. And what I said to my board recently is, let's not confuse activity with progress. There's been a lot of talk about mergers in this space, and I do think the industry lends itself to consolidation. But what I've said to some of your peers is that the reason we think our deal is getting the support that it's getting is because the strategic and industrial logic is compelling. The shareholders get it. They understand it. I spend a lot more of my time with the shareholders on how do we get this done to have the value creation opportunity, not does it make sense. They all think it makes sense. I don't know if some of these other deals made as much sense strategically. And remember, the businesses we all operate are, in some cases, critical parts of national infrastructure. And I think what you saw in Australia was a decision by the government to say, not sure this is in our national interest. So I think our deal's got strategic logic. We've got support from shareholders and policymakers. I think I like our chances a lot better than I like my chances.
Well, as you just gestured towards with the Australia deal, that foreign ownership element makes some people uncomfortable there. This is a New York institution. This is an American icon. There's some opposition to having Germans own 60% of the combined company.
Yeah, and remember, that's been a bit of an uninformed opinion, right? Because as we've said to people, our shareholder base is almost 90% U.S. DB shareholder base is almost 40% U.S. That's even changed more towards U.S. since we announced the deal. So if we close the books today, the combined company would have nearly 60% shareholders in the U.S., about 20 to 25% in Europe, and 15% in the rest of the world. That sounds like a healthy shareholder base to me. It doesn't sound like anyone took anyone over. It's a business combination with a global shareholder base.
And you managed to get more or less political support in this country for this deal to get done. I mean, how many jobs are going to be saved? How many New York jobs are going to be lost?
Yeah, I mean, I think what happens is if you put two companies like this together, we've said publicly there's a lot of synergies to be extracted. A minority of those comes from headcount-related savings. The majority will come from real estate, data centers, technology platforms, clearing platforms, et cetera. But there's no doubt there will be some job losses in every market in which we operate. We work in a competitive industry just like everybody else does, but I think it'll be pretty de minimis.
This floor will get thinner, though.
This floor, remember, this floor isn't impacted by the merger. The people you see standing here every day are not employees of NYSE Euronext. The population on this floor is a function of the business in the marketplace and the technology they're deploying and how much more they can do with less, given that they have all the technology at their disposal now. So that, to me, is a separate discussion from what happens with the merger, but the building's not going anywhere, neither is the name.
Well, and they are the icons there. Talk to me about the future of the industry here, because it seems like in this combined entity, 37% of revenues are going to come from derivatives. It's going to be a lion's share of the business. Is that the future, equities sort of secondary going forward?
I would say for our industry, what I like about the combined business and what I think the shareholders like, when I go back to the strategic logic point, is we'll have 5 businesses, none of which are too dominant. Yes, derivatives will be the biggest of the 5 businesses, but we'll have a big derivatives business, by far the biggest of anyone globally in terms of the equities and listings business, a big post-trade business, a big market data business, and a big technology services and analytics business. To me, that's a more bulletproof portfolio. It's a more defendable portfolio. What I say about this amazing place a lot is the U.S. equities part of our business now, standalone, is the most iconic, but it's also by far the most competitive. I can't hang my hat as a CEO on that business exclusively. We need to diversify. We need to be more global. We need to be in more asset classes.
And in this combined entity, you would have hold of two of the largest derivatives houses in Europe, also big portion of stock trading in Europe. How do you convince regulators that it isn't a monopoly, that they should approve it in August?
I think if you look at it through the global context, that's pretty easy. We're building a nice European counterweight to the CME here in the U.S., to BMF Bovespa in Latin America, and to the Hong Kong Exchange out in Asia. That's the right thing to do to build a European champion. I'm sure there'll be a lot of rigorous work done around the derivatives business. In the equity business, we'll have 25 to 30% market share. I don't think that's going to rise to the level of a difficult or challenging discussion.
So what changes for your customers if this gets approved and moves forward?
Right out of the gate for the customers, I think they'll be saving in terms of infrastructure and connectivity costs, because right now they have to spend to maintain connections to all the NYSE Euronext products, all the DB products. That'll change. There'll just be one connection into a bigger house of products. And the second biggest thing for the customers is, particularly on the derivative side, you put these two clearinghouses together, the margin offsets we can give by naturally offsetting the risk of these positions that now sit in two different clearinghouses, that'll be in the billions of dollars. I think that'll be pretty compelling for them.
All right, Duncan, thanks for your time this morning.